Welcome to the GECA Podcast, powered by the Global Equity Crowdfunding Alliance. Dive into the realm of borderless equity crowdfunding, where we bring the world's top experts and industry leaders directly to you, discussing innovations that are redrawing the boundaries of finance. Ready to expand your horizons? Here's your host, Andy Field.
Hello, everybody, and welcome to the GECA Podcast. Today, we're diving into a part of the equity crowdfunding and startup journey that's often overlooked, and it's actually quite important, and that's what actually happens after the raise. So my guest today is Joey Hayes. Joey's an entrepreneur, investor, and he's the founder of THRU, that's THRU, a company focused on helping founders unlock the real value hidden in their cap tables. So Joey's career began in global commercial roles at companies like IHG, Hyatt, Hilton, and Booking.com before he made the leap into entrepreneurship and investing. And in 2021, he launched the first of his bootstrap businesses, MacShack. And this was a journey that sparked one of the most important insights in his career. He's spoken about that many times, and that is, for many founders, isolation and underutilized investor support can be just as dangerous as a lack of capital. And looking across his portfolio of more than 65 startup investments, Joey noticed a reoccurring pattern, and that was that founders raising money successfully, but then struggling to engage and leverage their investors once the campaign ended. And what followed was the creation of THRU. THRU is a platform and a philosophy that's built around turning passive backers into active contributors to growth. Now at GECA, we often focus on how to raise capital more efficiently across borders, and Joey is going to remind us here that raising capital is just the beginning, and that what founders and platforms really do next may matter even more. So today we're going to explore how investor engagement really works, why so much value remains untapped, and how activating those communities could reshape the future of equity crowdfunding. Joey, it's great to have you with us. Welcome.
Beautifully said, Andy. Thank you so much.
No problem. And Joey's actually based in Amsterdam today, so I'm just, I've got a big woolly jumper on here. It's pretty cold. Hopefully it's not too bad for you where you are.
I find if I wear summer gear, I feel warmer. So that's my strategy.
That's a good one. That's a good
I'm
one.
right there with you.
Fantastic. Joey, let's get right in. You've worked across global hospitality and tech giants. What first pulled you into startups and investing?
Yeah, so my interest in crowdfunding actually started when I was in grad school. I was at NYU, and I was studying sustainable real estate development, and I was able to do a project on the first crowdfunded skyscraper in Bogota. And it was a project that I really dove into and I loved, and I became really interested in crowdfunding then. And then moving on, when I moved over here to Amsterdam during COVID, I got really into crowdfunding again. It became my little obsession, my COVID obsession. While people were buying on Amazon, I was investing small tickets amount in companies, for better or for worse. But I really got into the crowdfunding space and investing in startups, and then started my own business, my first business, MacShack, my restaurant. And then I started to join a lot of founder communities, both online and in person. And that's really when I started to really love what these communities were about and how helpful they were and how interesting it was to understand the whole entrepreneurial journey. And that's what kind of got me obsessed with trying to help founders make it easier for them.
Yeah. Okay. So going from that corporate to becoming the founder and investor at the same time, I suppose. Yeah. How did that shape how you see what the ecosystem looks like today?
Yeah, it was like you said in the intro, it was starting business. It was quite a lonely journey, but it didn't really have to be. It was fun and it was fulfilling. But what I found that there was all this support around me. So for example, I would get out of work and then I would go to my restaurant and I would start to work on all the problems that a restaurant has. I was in charge of the business side. My partner was involved in the operations and the cooking, and I would sit there and kind of like bake in my problems, for lack of a better word, and just try to determine who in my support network was there to help me. And I realized that there was just a lot of not conflict, but there was a lot of friction between the help. I know that I needed help, and then trying to actually grab that help from the people around me. So that's what started me into getting better at entrepreneurship and determining that asking for help was actually a huge part of a successful entrepreneur. And it's also that it's a skill that a lot of people don't have in general, but a lot of entrepreneurs don't have because we just want to do it all ourselves. So that made me a bit obsessed over trying to help myself, get better help from the people around me, but then try to help others also do that. And then when I was determining on what kind of company I wanted to start, I struggled with it for a while. And then all of a sudden one day I was like, crowdfunding. And I started to look at my portfolio and I was like, none of these founders, none of these startups are really have ever asked me for help, really.
Sure.
And
Someone who's got an active interest in the business.
Yeah, someone who's got an active interest. Actually, I have an interesting story for you, Andy. I was at a hospitality tech conference in Paris, and one of the founders that I invested in was there, one of the best startups I invested in, and I was really excited to meet him. His name was Luca, and so I went up to him after his talk, and I said, "Hey, Luca, I was an investor in your WeFunder campaign a little over a year ago." And he was like, "Oh man, that's so great." He's like, "What the hell are you doing here in Paris at this hospitality tech conference?" And I said, "Well, I work for Booking.com," and his eyes lit up. And he was like, "You work for Booking?" He's like, "I've been looking for a Booking.com contact for months now." And I'm like, "Well, Luca, I've been on your cap table for over a year now." And it's my bio says that, my LinkedIn says that. And he's a super dialed in founder, Andy, like very dialed in. So I'm like, if he's missing it, everyone's probably missing it. And it's true. And the more founders I spoke to, the more I got to notice that this just wasn't something that they really planned for. And like these cap tables, they collect all the money, but then that post raise, it becomes a void. So that's when I decided that I think this is something that I could really be helpful in the crowdfunding ecosystem, but just with startups and founders in general.
So it's about really your experience with MacShack. I mean, I know you've spoken about that not really working out so well. Can you give a bit more insight as to what that period taught you about being a founder? I mean, I know you've mentioned already the isolation side of things and almost the fear of asking for help. Did you recognize that you needed help, or was it?
Absolutely.
Yeah.
Yeah.
So
I recognize that I think everyone needs help. It was a matter of determining how to ask for help, when to ask for help, and who was the best person to help. That's what I really struggled with. So trying to cut through all that noise. And then by the time, a lot of times I asked for help, I was in like the red zone. It was already just at a point where I've tried everything else. And then you're asking in a sea of panic. And that's never nice for either person. So trying to be more proactive and just understand, what you need help, why, when, and then go to that person and say, "Hey, I really need help with this." And trying to make sure that it's not in a panic mode where you're putting a lot of pressure on them. So try to make, when you're asking somebody for help, the one thing I learned is you have to make it as easy on that person as possible.
Yeah.
So that was a big takeaway. But also it was a mindset shift. Instead of looking at help as something of a burden that you were putting on somebody, I saw it as, and somebody told me this, and I forget who it was, but to their credit, when you don't ask for help, you don't give somebody the opportunity to help you. So that was my mindset shift right there. It was saying when you don't allow that person who wants to help you, and therefore you're taking something away from them. So that was what changed for me.
Yeah, it's a great way of looking at it. And I think entrepreneurs by their very nature are probably not the best people in the world to automatically ask for help. They're very entrepreneurial, of course. They like to think they understand their own business and nobody knows it better. And of course they don't. But there's no harm and no shame. And it can only be an advantage in getting the right people to help with the right problems. So I mean, that's a great gap that you found there. How different do you think your journey with MacShack might have been if you'd have had sort of stronger engagement from people helping you?
It would have been a lot different. Honestly, though, I don't think it would have succeeded either way, because it wasn't the right business. It wasn't the right business for me. It was a really great first business, but at the end, it wasn't. I think it would have, even if it did succeed, I think I would have been pretty miserable, to be honest with you. So, but I think that my takeaways from that is exactly what was supposed to happen, and it was supposed to lead me onto this. But I think there's a lot of people out there in similar situations where they have businesses that are maybe struggling or they're struggling and they don't know how to capitalize on the networks that they have, whether it be their investors, whether it be their friends or their family. But where I think this is most beneficial truly is in crowdfunding, because you have hundreds and thousands of people that are literally invested in your business, and they've already given you the money, Andy. Like, that's the hard part,
Yeah,
right?
that's right. They bought into you. Yeah.
Yeah, exactly. Asking them to share a referral code or or to intro somebody, that's probably the easy part. And I think also a big part of it is riding the momentum of the raise, right? You come off the raise and everyone's super excited, especially if you've hit your target. And then your communication drops off a cliff, right? And then you're killing. Momentum is so important in business and in everything. So to be able to continue that momentum after the raise and be able to really capitalize on the knowledge and the skills of your investors, it's going to make you that much more successful, keep them engaged, and overall make you have a better business.
Yeah, and again, that makes perfect sense. So I guess moving on to what you're doing with THRU now, why do you think that founders struggle so much with sort of activating their investors after the raise? Is it that perhaps crowdfunding, the end is seen to be once the raise has been made, right? So the capital's
Yeah.
been raised. That's the perceived end of the crowdfunding project. Where I guess what you're saying is actually that's kind of just the beginning. You now
Sure.
need to activate
Yeah.
your investors. Why do you think they struggle?
So a couple of things. I mean, one is that they are exhausted. They are
Yes.
the raise is
Yeah.
just exhausting, and they a lot of times it's a lot more work than they expected it to be, and usually by the time it's over, they're quite relieved, and they just want to get back to building their business, which is fair. So another part is they don't plan for the post raise. There's so much planning that goes into the raise itself. And then post raise is always it's seen as a big value. Whenever I talk to a founder, they say a big reason that they choose crowdfunding, it's not only for the money, but for that community throughout the entirety, from the raise, the post raise, in between raises. And they want to engage and they want to activate this community, but they just don't plan for it. Or it's something that just gets kicked down the road quite a bit. And then a lot of times they don't have people for it. So the founder or the CEO is usually the one who's doing a lot of it. And after the race is over, they just want to do something else. They want to get back to building their business. So if they don't have a community manager or something like that, which I think is so important if for a crowdfunding company to have somebody who's really in charge of that community piece. So it's mostly those things. It's mostly just it's a lack of planning. It's an exhaustion from the raise itself, but it's never really malice. But it's also a lack of strategy. There isn't a lot of people doing what I'm doing. There's barely any. It was very actually hard to find any type of firm or consultancy that really focuses on the post raise. It's always focusing on the raise itself. So I think it's just a lack of support is another thing. So yeah, I think all those three things just combined make it so it's just not an easy transition.
And I guess that what sets the crowdfunding companies apart in a positive way, actually, from any other startup business, is that they've got this wonderful marketing asset there, which is a community of people who, like you said already, have already bought into the idea of the business. They've actively invested into it, so they believe in the story that's been told during that crowdfunding process, which we know is also important during the raise. And actually approaching them and talking to them and activating them is only going to be beneficial because they're already ready-made ambassadors, I suppose.
Exactly. Exactly. Yeah. It's you're if you go up to any company that says, I'll give you 1,000 people who want to help your business grow, who are truly invested to help you succeed, and they'll be like, oh my God, I'll take that. What do I need to do to
Yeah.
give me these names, give me these email addresses, right? And you have them already there. And another interesting part, Andy, is that a lot of founders don't realize that a lot of times the people who are investing in them are in the industry themselves.
Yes.
Like yeah, it resonates with them because it's something that they see, they understand. Like I tend to invest in hospitality companies and hospitality technology because that's a field that I'm in. It's something that I know a lot
Yeah.
about. So a lot of times when you come through your cap table, what you'll see is a lot of people who are who are in the industry that you are also in, and so they already are. It resonates with them, your message, but they're also in a better position to help you.
Yeah, so their main driver for the investment may not be, a set return on that investment within a certain amount of time. It could just be the fact that they're really interested in this area, and
Yeah,
they know a lot about it, and so they're therefore in a great position to be able to help. Yeah, that's really
yeah,
interesting. So
yeah.
you've mentioned that you've sort of noticed patterns across the sort of 65 plus investments that you've looked at. What sort of kept repeating themselves? Is that something that includes what we've already spoken about, or is there anything in
Yeah.
particular that? Yeah.
Yeah, I think a couple things. So, some startups and founders were good at the engagement piece still. I found that about half were good at continuing engagement. So whether it's just sending, marketing campaigns, like putting the investors on their marketing campaign emails, so they were,
Yeah.
or posting once a month on WeFunder or Start Engine or whatever platform that they're using, but really none of them were really meeting this activation piece, and none of them had the mind, and really not, I shouldn't say none of them, but the ones I spoke to didn't have the mindset that their investors were a growth channel. They just really see them as as a source of capital. And then it's like a hard stop. It's a weird mental block, you know? I was talking to a founder the other day with 3,000 investors, and he's like, Joey, I don't know why like we didn't think of this. Like, why don't we do more with these evangelists of our brand who they can amplify our
Yeah.
marketing, they could refer customers, they could intro to partnerships. And it's never seen from a commercial lens. It's always seen as an investment, as a capital raise lens. And a lot of times people don't realize that when you continue to engage them, investors are 3 times more likely to reinvest if they're engaged. So that's another reason I tell founders, I'm like, you just have to continue to reach out. So a lot of times they put too much emphasis like on what to say. They don't know what to say. Sometimes they don't have anything to say. And I think this happens with a lot of startups and founders in general when they want to reach out to their investor base. Like, I don't know what to say. And a lot of times it's just like you can really say anything. Like sometimes people just
Yeah.
want to know what's going on.
Yeah.
They
Yeah.
just want the comfort to know. The worst thing is silence. So I think there's a lot of overthinking out there. There's a lot of underthinking and overthinking, not a lot of middle ground thinking, which is what you need.
Yeah, and actually you've kind of answered the question I was going to ask you next, which was what's the biggest misconception that founders have about their cap table? And that is you've kind of just said it there, I think.
Yeah.
Unless there's something more in that they only see these investors as investors, but actually you've got a really great whole bunch of ambassadors who have already invested financially into the business, and actually it's in their best interest to see this business do really, really well. And if they've got the skills, which they probably have, and the interest to help, essentially market that business
Yeah.
and make positive change, then it's only going to be an advantage. So you probably already answered that question. The biggest
Yeah.
misconception that founders have. Yeah.
Yeah. But on the capital front, even if you look at that, you should be looking at your investor base as a way to get more investors, even as a way to get institutional investors. We've seen a lot of we're going through cap tables, and a lot of these, retail investors or accredited investors, they work for investment firms who literally say, reach out to us if you're looking for more capital. So I think there's a misconception that I shouldn't say, there's a bad practice of not looking into the cap table. Like WeFunder does a good job of this, of collecting the bios and collecting a lot of during the checkout process, they ask you
Yeah.
a number of questions as an investor about what could you do to help this business? And it's mostly ignored, it seems. And because it's quite intimidating, you download this, say you have 500 investors, you download this spreadsheet and you're like, okay, I'm not going to sift through this.
We'll
So
put that in a
that's what
drawer. Yeah.
yeah, yeah. So that's what we do, is we sift through it for you, and we determine, who's best suited to really help you and who's really willing to do this. And we do this through the data that we collect from WeFunder or Start Engine or Republic or whoever the platform is. And then we do our own survey that we co-create with the founder themselves, and to get a little bit more information. And you could also it's also a good way to gauge who in your investor base is extra motivated. They're the ones who will fill out this survey and
Yeah.
answer these questions and determine, how they're more so willing to help you. And what we're seeing is it's around 20 to 25% of investors take that extra step to fill out the survey. And then we can really cross-reference the data that they have from the platform, from the data that we get. And then we are finding that around 10% or so of these investors are actually very high opportunity investors that could really do something that's quite significant for your business.
Oh, that's interesting that you're building those stats as well. And it's a great segue into what I was going to ask next, which was specifically to do with how THRU actually do things a little bit differently from typical investor relations tools, because there are some other tools out there that businesses and founders can use.
Yep.
How do you do things differently at the moment? I mean, you've talked that it's presumably it's quite a manual process at the moment. You really
Yeah,
dig deep into the data that you have at your disposal, and try and
yeah.
make as much sense of that that's going to be useful for the founders as possible.
Yes. So we don't have our own platform. We try to make it as easy as possible. So what we do is we just ask for either access to the back end of your tool, so we can go in there, we can download the reports ourselves. We co-create the survey with whatever tool that the startup is using, whether it be Google Forms, Jot Form, whatever. And then we take all that data. And then we use AI as well as some manual lookup, and we determine what are the goals of the company, which we get from the founder themselves, and then we try to cross-reference it with all of that data. And from there, we take the findings from the survey, anything that really stands out. So there's some things in there that are very interesting for the startup itself, that they just want knowledge because it's a good way to gauge. Like for example, a good example is who of your investor base is a customer of yours? A lot of
Yeah.
times founders have no idea. So just understanding that is a great way that you could see who you can retarget. Because if say 30% of your investors aren't customers, do a targeted campaign out to them and get them to become customers. And we've had a
Yeah.
lot of success with that. So we do everything quite manually, but the one thing that we didn't want to do is be a platform. The last thing anyone needs is another platform, we believe. So we are trying to utilize everything that we can to make it as easy as possible. We at the end of the analysis period, we develop a report on a simple Google Doc, and we go in there and we put our recommendations in there about what we found, and then me and the founder go through it, or whoever's responsible for their raise. And then we determine what's the next steps. Do we want to dive deeper into a certain segment? Because what we do is we have these high opportunities, but we also segment the investors by their industry, by their level of engagement. Because we ask them, do you want to be supportive? Do you want to be inactive? Do you want to
Yeah.
be silent? And so we don't want to bother you. And then there's a lot of learnings from there. And then we move on and on and on until we get something that is significant, and then that the founder can actually go and reach out to these people and try to determine how they can best help them, but also helping with the outreach themselves. So what is the best way to go out to these particular group of people? A lot of times you don't just go out and ask for help. A lot of times what you do is you ask them for advice. Hey, look, I noticed that you've been in this industry for 20, 25 years. If we wanted to break into this industry, how would we go about that?
Yeah.
And that's that's advice that they're really happy to give. And then from there, you develop a relationship with them. So it's about nurturing the high value opportunities within your cap table. And then moving on, like our next phase, I know we just started a couple months ago, but we're already thinking about trying to productize this, is really trying to look into the tech stack of the founder, what they're actually using, see where we could plug into, determine in real time what opportunities and challenges they're having, and then pinging their investor database, ranking them, and trying to help the founder get through all the noise between, okay, I have a problem, this person can help me, trying to connect all those dots all the way up until actually like drafting communication out to them, so that there's a little less friction between that needing for help and asking for help. And then the founder is overall feels more supported, and hopefully the startup is more successful.
Yeah. Okay. Well, that's it sounds like a really pragmatic approach. And so if founders I'm sure you've come across founders that are trying to do this to a certain extent, and they may be limited by resources,
Yeah.
by finances, just by sheer energy, actually, that we've already
Yeah.
spoken about. They're tired. So, but and even when working with you, presumably you do come across some problems. You'll often, not often, but you'll have times when you'll get stuck when you're trying to engage investors. Can you give me some examples of how that might look, what that might look like?
Yeah, it's sometimes people say a lot and they don't respond, and
Yeah.
and that's okay. And then usually what we'll do is you give it three shots, and then if not, and then you move on. But
Yeah.
that's also something that I think is a big value long term for us, is really understanding who are the investors out there who are really, founder focused, who really want to help, or who just say that they're going to help but really don't. And it's also a matter of not email blasting out what you need to every single investor in your cap table. So you really want to take that like top 20 and really do some dedicated outreach. Take the
So
time
some personalized
to,
stuff. Yeah.
yeah, take the time to personalize it, because that's when you get more responses that way.
Yeah.
If you say, and also call them out, say, hey, listen, on the survey, you said that you were willing to help with this. I'm calling you out. I need the help, you know? So come and give me some help. And a lot of times they like that. And the more, not only the personalized outreach, but the specific ask is really important too. Don't go out there with some generic ask. Hey, I need intros to, you know, the luxury
Yeah.
hospitality market. You're probably going to get crickets. You need to find people who are looped into that industry and ask them, I need to know, based on your background, how to go into this industry, and ask very specific questions, and if you're going to get them on the phone, get on the phone with an agenda and make sure that you're not wasting their time, and you're not wasting your own time, because a lot of this can be quite intimidating. For one of the founders that I'm working with now, he told me the report I drafted him. He's like, Joey, this is great, but this is overwhelming. He's like, there's so many things in here that I want to capitalize on. Like, I don't really know where to start. So
Yeah.
that was good feedback, because then we tried to go in there and say, okay, well, these people we believe that they're similar in what they can do for you, but this person invested 25,000 and this person invested 500. So maybe we'll start with the 25,000. Is that always the right thing to do? Maybe not, but also we learn from that as well. So it's really trying to get the best data that we can, but also when we get it's not all going to come through the platforms. It's not all going to come through the surveys. So we want to add another level of enrichment in there. So we do some manual searches on LinkedIn, and we try to add some of that in there as well. But just get it as robust as possible, so we have the highest chance of success for the founder.
Yeah. But if I was an investor in a business and the founder approached me with that kind of personalized approach, I would take that as a complete positive. You know, that's a very proactive approach in trying to make my investment work. So, you know, I
Yeah,
think it can only be
yeah.
a good thing.
And that's why I focused on the investor. There's a lot of these connection apps that exist, right, Andy? I've seen them all over the place.
Yeah.
But it's usually one party needs something and the other party is indifferent to helping them. So so a lot of times it's not a very good experience. But when you have a startup, you have a founder, you have an investor, the incentives are aligned. So there's a much more likely chance that a communication will be positive, and that there will be a better outcome, because both people are incentivized to make sure that the outcome is positive. And again, it's riding the momentum. So it's important to do this right as either when your raise is going on or when it's ending, because you don't want that 6-month period of gap to go, and then all of a sudden you reach out and it seems kind of stale. You
Yeah.
really want to catch it, within the first, 30, 60, 90 days of the raise.
Yeah, and I guess that's if there's ever an example of apathy not being the right way forward, then this is it, I think.
Yeah.
So how do you think this could have an implication on what information the platforms provide? So what should platforms be doing differently to support some of the activities that you're doing, the post-raise activation? I mean, you've already spoken about a platform that gives a huge amount of data and asks the right questions for investors. Is it
Yeah.
simply a case of more platforms doing that, or is there more they could do?
I think so. I think it's that. I think offering templates for, how to write a proper monthly update to your investors, reminding founders to send out their investor updates. King's Crowd just launched a free investor
Yep.
relations tool that I was going on. So things like that are really quite helpful. But it's really educating. It's taking the investor engagement and moving it from a chore or a compliance issue into something that is profitable. It's that switch in the mindset of a founder that says, this is something I really don't want to do, because it is a lot of times it's seen as a chore, into, okay, you will lose money if you don't do this, or you're missing out on opportunity if you don't do this. So I think we just need to be better at educating the founders, giving them the tools and the resources to say, okay, this is something that is a huge benefit of crowdfunding. This crowdsourcing support and crowdsourcing help is probably one of the biggest reasons you chose crowdfunding. So to not capitalize it is kind of a waste. So I don't think as an industry we've done well at that. And I think that this whole stewardship that Brian talks about, that's something that we really need to focus on, that everyone needs to be built, that everyone needs to be pushing kind of the same narrative there. Because we've spent the past 10 years or so building this as a type of access, getting access to more investors, getting access to more founders. And now we need to look at the next phase of professionalization, which is really this post-raise and getting retention and making sure that people are that investors are having a good experience so they come back, because I think we've lost a decent amount along the way.
And so many of the people I speak to, certainly in the podcast, we always come back to the education piece, and that's I think that's absolutely right. In this example, it's just educating that, of course, the work doesn't end once the raise ends. So yeah, that all makes sense. So looking ahead, how do you see sort of founder investor relationships evolving over the next 5 years? Obviously, it's going to involve more engagement.
Yeah.
But how do you see what does that look like?
I'm hoping that, AI and automation play a bigger role. Like that's what we're banking on at THRU. We're banking on being able to detect opportunities and challenges for the founder, and then being able to decipher, how these issues then relate to their cap table and who can help them, and if it's the right help, right? But also trying to utilize a lot of these meeting note takers and a lot that everybody has now to determine, hey, listen, these are all the meeting notes from the last month. Write me a summary of for my investors
Yeah.
and just send it out. Like AI and automations will be able to do a lot that is seen as more chore-based stuff.
The daunting stuff.
So
Yeah.
yeah, the daunting stuff that you don't want to. So like where I'm focused on is more of the activation, but I'm very clear to the founder that you need engagement first before you do activation. And you also can't, yes, it's the 80-20 rule. You're probably going to focus on the 20% of your of your investors, but you can't ignore the rest. So there's communication strategies that you have to have. You have to have a targeted communication strategy and more of a gross communication strategy. But I believe that the platforms are going to do a lot more, because we're seeing them do a lot more. I think there's going to be a rise in access. There's some legislation going through Congress in the U.S. now that potentially might increase the amount that you're able to raise.
Yep.
So I think there will be a bigger focus on this, because I think it's all about the experience of the investor as well as the founder. So I hope that it only gets better from here, and then crowdfunding continues to grow, and people have better experiences and they come back and they pass this along to their friends and family too.
Perfect. So just to sort of sum things up, if there's one thing that any founders who are listening today could change tomorrow, what would you choose? What would that be?
Say it again.
One thing that any founders who are listening to us today should actually change tomorrow about how they're operating post raise. What would it be? Without wanting it to sound such an obvious question.
Yeah. Well, I would say when's the last time you reached out to your investors? And what do you know about your what do you know about your cap table? If someone was to ask you, how do I get XYZ introduction? Would you know who to go to on your cap table?
Yeah.
Do you know who's on there? So I would say one thing is that they should look at their investor insights, and two, they should look at when's the last time they did a communication out to their investors. And if you don't know, how can you find out more about your investors? Feel free to reach out to us, of course.
Yeah.
But number two, if you haven't communicated with your investors in more than 30 days, do it. And like I said, there's really no bad communication. Obviously, you want something that's robust, but you could also say, hey, we realize that we need to build a communication strategy, and this is what you can expect from us, and we're working on it. That's also fine too. But just say something.
Yeah. Okay. So just to finish off, where can people learn more about THRU? You've obviously got a website, and about your work. Presumably you have a LinkedIn profile that people can connect with. And also, obviously, at GECA, our listeners are literally across the globe. Do you work with sort of founders who are located anywhere? Yeah.
Yeah, we'll work with anybody. So yeah, we're happy to have we focus mainly in the US, like I said, because we just started. So I've been mainly focusing on my investments, but yeah, we're trying to scale up. So yeah, anyone around the world, we're happy to help. And yeah, my LinkedIn is the best way to reach me. Maybe you could put the link
Yeah,
in the show
yeah,
notes.
it will be. Yeah.
Yeah, as well as our company page, and then www.comethrough.co. We have a request early access button on there, so that'll go straight to me. And then we also want to determine if it's the right fit. And like I said, we're also consulting. So, and it's just me right now. So there is a bandwidth, but trying to help as many people as possible. But yeah, if you reach out, and then and we'll determine how best to help you.
Fantastic. Joey, thanks so much. It's a really powerful and a practical conversation as well. And what really stands out here is the reminder that capital alone doesn't build great companies. It's the people that do that. And when founders learn how they are going to truly activate their investor communities, they're going to unlock not just the funding, but momentum, insight, and advocacy. And for GECA, this is a crucial part of the puzzle. Building better cross-border markets isn't only about regulation and platforms. It's also about what happens inside each cap table once the raise is complete. So thanks again, Joey. That was a really fantastic conversation. We'll be sure to put anybody in touch with you who likes the idea of what you do. And thank you again.
Thank you, Andy, and thank you for everything you do for the industry and with GECA. I'm excited to work with you moving forward, and I really appreciate you giving me the opportunity today.
No problem at all. And to our listeners, thanks for tuning in. Stay with us for future episodes as we continue to explore the people, the policies, and platforms that are unlocking crowdfunding without borders. Don't forget to follow GECA for more conversations with the people shaping the future of global equity crowdfunding, and visit thegeca.org to learn more about our mission, our growing global supporter base, and how you can get involved. Thanks, everyone, and we'll see you next time.